So, tax, VAT, the TOMS scheme, all of these trigger words have been going huge recently in the serviced accommodation market. And I flew all the way to Ireland to sit down with my accountant and speak to him about what is going to be best practices to make sure that you guys are safe, you are secure, and you understand what is the best way to structure your companies, what is the best way to approach tax, how to work to make sure you don't hit that dreaded VAT, because in service accommodation our margins are so tight as it is that when we have to get that close to that VAT threshold, that extra 20% is going to wipe out all of our returns or make us so overpriced for the rest of the market that we're never going to get booked. So why is it so important to understand your accounts, understand your structure, and speak to people that are actually going to be able to help you out? So I sat down with MJ from MJK Accountancy firm in Ireland, who I've been working with for the last 3 years. They do absolute wonders with my account. So sit down, listen. If you're in the past the booking community as well, make sure you listen out for your questions, because we've got a Q&A at the end of the video as well. It is a little bit of a long one. Go grab a brew, sit down, maybe grab a pen and paper and make some notes, because this is going to be full of some absolute gems. Bit of a mess really, but
to be honest, it's turning into a minefield now.
Yeah.
Like, people will message and say, we're in a service accommodation business, can you look after us? Can you set us up a company? They want holding companies. Everybody seems to want, there's property involved, so I have to have a holding company. And it's obviously not the case in 95% of the people we work with. But where we notice people get it wrong is you throw the term service accommodation around, you instantly think it's all short term, and that's where everyone gets stumbling blocks. Like, we've worked together for 3 years, and I've never once mentioned the TOMS scheme to you. I mean, I've got clients on the TOMS scheme I have for years, in accommodation and in actual travel services, and it's never crossed my mind of, oh, we'll put you onto it purely because you do short-term leases on Airbnb.
I think that is something here that is really, really key, that the TOMS scheme is something that is made for the travel and tourism industry. It's not something that is made for serviced accommodation alone. So with what MJ is talking about here is basically talking through, a lot of people think that they need a specific structure, think that they need their account set up in a specific way, but it's always better to actually speak to an accountant about that structure, because it is a minefield at the minute. There is so much conflicting information, and probably me doing this video is creating more conflicted information. But after sitting down with MJ, and MJ is someone who I've been trusting with my accounts for the last 3 years, and he has not done me wrong at all, and everything that we've been working through has been absolutely spot on. So I don't recommend people, or I don't sit down with people like this if I don't believe that they've got a lot of value to add. So it'd be interesting to see what MJ talks about a little bit more, and I can try and break it down for you guys as we go. I mean, number one, because it's such kind of a trigger point in the system at the minute, what was your kind of opinion and your take on the
Saunders?
The Saunders case thing?
Yeah, it was unfortunate because when they won the first tier tribunal, it was all based around what the definition of material was. That's what you're saying. You can't make any changes. And everyone's always approaches the term material from a physical perspective. And he or she is materialistic. They like products, like things, like items. So when HMRC assessed it and the FTT assessed it, they approached it from a physical perspective. And then when the U2 assessed it and went, no, we're actually going to look at it from an economic perspective, of economically you've changed what this is. That's when everyone was like, right, here's a problem. Because that material definition change basically overrides 3 of the criteria to go under the TOMS scheme. Bear in mind it's only 4. So you're instantly beat out. I mean, when I looked at the Saunders case, we always would read through what basically the UT supplies. So it's like a 48-page document. I can't imagine anyone else has probably read it apart from an accountant, because we're interested in what was the flow and what was the actual take-backs from it, what were the bases that they kept coming back to. And everything that they looked at and went, okay, you're in travel service, it's short-term accommodation, but you've actually had to change the contract to get there, so you've materially breached it. And it's like, okay, you've not physically changed anything, but you've still materially breached the contract, and you've changed that. So we're outruling that as well, and you're acting as yourself. But again, they kept coming back to, you've changed what the lease is for to suit yourself. So it's now an in-house supply, it's not a bought-in service, and then it's not been pushed on.
Really, really big this, and Michael goes on to explain this in a little bit more detail, but basically, I mean, as anyone would, you expect the word material or materialistic to be someone like a physical thing, like someone has, I'm trying to find, this is a physical thing, this is a material thing. Like having a watch, someone having a lot of watches is like a materialistic person. So you think of it as something that's physical, but the way that the upper tribunal have assessed it and looked at it as an overview rather than what the lower tribunal was saying or the normal tribunal was saying was that basically materialistic isn't just a physical thing. It is actually an economic thing, a contractual thing. It isn't just physical, there is more elements to it. So it changes the landscape of the whole scheme, the whole TOMS scheme, and not just that, but like case law and stuff as well, for actually like accounting case law as well. Yeah, we had to averagely take it on for like 3 to 5 years, really, so it's like... Obviously, that's one of the key selling points when we're actually trying to acquire properties, is getting the longer term leases there. But
so now you're going to have to go to these landlords and ask them, before you engage with me, what were you doing in the market? And if they weren't doing short-term leases on Airbnb, which thankfully a lot of them are, but if they weren't, then you're not going to qualify on that property.
That particular property.
And that's going to lead you into probably like a hybrid VAT setup, which is just, it's a nightmare to track. But that's what's going to happen, and that's you're forced.
Something that Michael said there is really key, of the hybrid VAT setup. Part of your business or part of your service can classify it as TOMS scheme for the TOMS scheme, but then part of it won't. So it's not something that you sign up for and like now you're signed up to that. Like something like the flat rate scheme is like something that you put yourself on, you're on a fixed return rate there. Whereas on this, you can be on it and you can't be off it. You can be on it and then you're not on it in different areas as well. So it is a bit of a minefield here, and it's why it's so important to speak to someone properly about your own situation and about your own properties more than anything. And I personally really, really respect MJ for kind of taking the time and doing this and stuff, but I find his knowledge around these subjects so valuable as well. But with the service accommodation based stuff and the structure that we've got, because I've like, obviously none of this has ever really affected us because of the way that you've structured it and set it up.
Yeah.
How has that been structured and how has that been set up to obviously make things as tax efficient for us in terms of tax returns as well as obviously the VAT side of things as well?
For you, the focus has always been, for you and for all our clients, the focus is, are you protected from an inquiry? That's kind of, that should be rule number one for every accountant. It's whatever structure we put you on is compliant. For you, it was from a VAT focus. Now you've got a company split because we looked at it and went, well, these companies are doing different services, so we could differentiate it. And as long as you can show, like HMRC would call it a SIC code, so an SIC code, we just call it an activity code. So as long as you can show that each business has its own activity code, we can split them out, and that's not necessarily done from a CT perspective anymore. So it's not done to reduce corporation tax, because if you there's now an associated company rule which will pull all your companies together and look at the margin relief there. So if you just kind of assume that your savings on CT are minimal at the best of times, it's from a VAT perspective. You know, if we can split out into 5 companies and never breach a VAT threshold, how competitive you are in a market is instantly higher.
So what we've been talking about here, which is key, and this kind of comes into if you've got multiple property businesses, then property businesses that do different things. Like if you've got a business that does deal sourcing and property deal sourcing, if you've got a company that does like furnishing and staging, or you've got a company that's a building firm, and then you've got a service accommodation management business, and then like a lettings business for like either standard lets or HMOs or whatever. So you can adjust what your businesses do through using a different SIC code or activity code, as MJ called it there. So this all comes when you're setting up your business and what different accounts you run and like what different SIC codes you put into your businesses when you're setting up your accounts as well. So there's a few reasons why you can set up like different companies for this, and I think it's like this activity code reason, this SIC code reason, or then a geographic reason as well. So whereabouts is that business actually based and where is it operating?
And if you don't qualify for TOMS, then you are going to get hit, and it's quite severe, which is why for yours, we've always known kind of from the outset, now maybe there's 1 or 2 properties in there, and then when we get to the end of the year where we look at everything and we'll have our conversation, we might identify one and then do a VAT adjustment. Because like I say, if you do hit the criteria, you have to go down the TOMS market. You can't choose that I don't want to. You have to do it. So we just look at that every year for you. But what we've done is we put you on the management agent style, because then that way your taxable turnover, which is what dictates whether or not you have to register for VAT, is the commission.
Yeah.
And it's that smaller margin. And that's why we've been able to keep it low.
Yeah. For that, do you need... So obviously looking at that in terms of a management company, that means that you're not getting taxed on your full revenue, you're getting taxed on your...
On your commission.
Yeah, it's a commission in your take home.
On the smaller amount.
For that, do you need to set things up in a way of like having a client account, or do you need...
Yeah, there'd be a few things. So we'd run through a checklist that we've got. We've got obviously our templates, but the key things on it are definitely a client account. So HMRC would want to see where is the fee coming into. If you collect into your main account, then there's an assumption that they can make that, well, this is your money. This is your account and it's been designated as your account. So it should come into your client account. Your portion should be removed out, and then your client account should always reconcile to zero. You should be moving the landlord.
So I think that is a bit that is really, really key for a lot of people to take away from this here, is how to set yourselves up properly as a managing agent. And again, I say set yourselves up. You don't need to do this. Please speak to an accountant and do this properly. But basically, as a managing agent, just like you can imagine what a letting agent would be, a letting agent is not going to take the full revenue coming into the business. Say there's £1,000 in rent and the management agent's fee is 10% for ease of numbers. The person who's renting the property is going to pay the rent into the client account. The management agent then is going to take their 10% commission off of that and put that into their own account. So then they're going to have £900 left in their client account, which then goes to the landlord. They are not taxed on their VAT turnover here in their client account. Their VAT and their turnover goes into their commission, their actual business. This is just a holding account for the client's funds. So I think that there is really, really key that a lot of people won't do. And there's a lot of banks out there that offer client accounts and stuff as well. And it's a little bit up to you to do your research and find out which banks are best to suit your needs. But again, a lot of this and a lot of the stuff that we're talking about here, it is very, very unique to you. There is no one size fits all. And I think that there is a really important takeaway from this conversation that we're having. Like, so this one here is like the one that's got all the lease agreements. That's got the 3-year lease, the 4-year lease agreements.
Yeah.
Is it better then to have another entity, another company, which is your management agent company?
It's so
then kind of you have the management contract with.
It's an interesting one. It does depend, because it's going to come down to activities again. You can look at what's the activity or what's the geographical location. So we can look at companies that only have property in Liverpool, only have property in Manchester, only have property in London. So we can split for a few different reasons. But if you went down a split of, well, this one's a management company, whereas this one's not. This one's like a serviced agent, like an undisclosed agent. You could split that way. And all you're doing is just playing with what's your ultimate taxable threshold and bringing that down. So your instinct is right.
Yeah, because I'm thinking, I'm not necessarily thinking like, okay, well, the income overall isn't going to change. It's more, obviously you're splitting your income, it might negate having to pay VAT at a certain point, but it's that point there where it's like, well, if this one is the managing agent one, that can be treated slightly different when it comes to the returns rather than that one. And obviously you could always section it so that if you have so many properties in this one, you change your management fees slightly so that there might be a little bit less, so you're not making as much.
Yeah, you could. Yeah, you could definitely do it that way.
There is a little bit more.
There's more wiggle room, and as long as it's always commercial, you can't go and charge someone a 2% management fee. They're never going to let it go. They'll take a base rate, which is probably the lowest you could get away with, 10%. I would imagine, based on what kind of goes on at the minute. No, definitely. I mean, average for me personally, I take 15% in management fees. So it's like, and it's just like I say, it's just a matter of when you're taking 15% of like a £3,000 revenue or something like that, obviously treating it as a £3,000 revenue or a 450 revenue is exactly. It's a huge difference.
And that can completely change someone's structure in the business in terms of when they need to be worrying about hitting certain thresholds.
I would say majority of people would probably breach the VAT threshold within having 3 properties.
Well, we got a £17,000 book. So it's like,
I mean, there you go.
It's like you get bookings like that. That was for 100 days. If you have one company over here, this company here that is got some properties, it's got some properties under lease agreements and stuff, and you've got this property company over here, which is trading service accommodation management company. This one that is the one that's holding all the rent to rents. And then you have a management agreement with this company that is the actual managing agent for it. It is a way to kind of shift the income around a little bit, showing the turnover of this is a managing agent account, this is the one with the client account, this is the one where it gets taxed on its actual commissions that come off of it, not the actual full turnover of the business. Then you have this one here that's obviously receiving all of the income from the actual properties itself. And this here is the one that's probably likely to be hitting that threshold a little bit earlier. It depends how many properties you're managing, depending if they're all your properties that you're trying to manage. But it is an absolute minefield. And I believe that MJ here kind of really, really described this section well.
Where things will go wrong very quickly is if you try to do it yourself. We've talked about it very casually as if working out the VAT and working out the CT, like I said, the CT is minimal, it doesn't make too much of a difference, don't worry.
Yeah.
That doesn't mean that it's easy to calculate. There's still a lot that goes on,
yeah.
especially with property, because MRC can get confused sometimes because you've got to remember their agents aren't necessarily qualified. So they would look at you as a property company and wonder, why have you no assets? Where's all your property? And the next thing you know, your means tested personally, and they've asked for 4 years bank statements. And you're thinking, what's going on? So having an accountant in place just helps with, we're the first lines when HMRC come along.
I would personally add to that as well, is that the way that we work with you guys, obviously we don't pay for our tax return at the end of the year, we pay throughout the year.
We do it monthly.
And it makes it a hell of a lot easier for us to manage cash flow. It gives us that kind of constant line of communication and support as well. And I think that personally is a much better way to work with an accountant.
For sure. There's no point showing up. Like realistically, you could for your first year you set up, you could technically wait 18 months before you even need to speak to an accountant. And we made a shift recently last year that we wanted everyone to have quarterly check-ins. We wanted to touch base. And it was good for businesses like yours where we needed to be constantly assessing from a VAT perspective as well. But it's turned out to be brilliant for businesses that don't even need that constant assessment, where they just like to have someone there that they can touch base with and ask a quick question. So I would definitely agree. I mean, first, from a cash perspective, great. It does make a big difference. But then from a perspective of, well, I'm paying you monthly, so you're there. And I can always just phone up and ask. The majority of my day is just the phone goes, and you just answer that, or you're answering a WhatsApp or an email. It's not actually doing tax returns so much anymore. It's more the communication element.
Because I think that you've got that and you can rest your mind easy about this particular thing that's happening. I mean, with all of this stuff going on, it's like the service accommodation agents have probably been blowing up your phone and talking to you about.
It's been a lot,
But it's like, and I think that it's just gone into certain worlds, but that's why I wanted to sit down with you and talk to you, because I wanted to get some clarity for everybody else about
what to do.
And when I sent it to you and I were a little bit worried, you were like, it doesn't matter.
Oh well, I knew you sent it and I was like, oh, you're fine, trust me, you're okay. But to go back, I suppose what you're saying about people who kind of have one or two properties, you don't really have anything to worry about. If you've got your company there, that's the key thing. That's the first thing you could do. That's the best thing to do. Get a company. You're unlikely with one or two properties to actually really hit any VAT thresholds. Realistically, it's not going to happen. If you do, as long as you're kind of following a management agent approach, or you are genuinely on a TOMS and you're TOMS eligible.
I think people are worrying about this issue too soon. They don't. If you've got one or two properties, even 3 or 4 properties, hitting that VAT threshold and whatnot is. It can happen, but there can be things that can be done to restructure a few things, to show income coming in different ways so that you're not thrashing through that VAT threshold and you're not having to pay the VAT, because the margins that we have are very tight on this business model anyway. So when you chuck the extra 20% for VAT, it does potentially wipe out a lot of your profits. So I can understand why so many people are worried about this and why it is such a concern. But this is why it is so important to get things set up correctly and speak to the people in the right way. But if you're very early on in your journey, I know you might want to kind of future-proof your business and set things up right now rather than having to worry about it later. It's the perfect opportunity to get in touch with an accountant, but at the same time, it's not something that you need to directly worry about so much now if you are in them early phases of like the under 5-ish, 4-5-ish properties would be the point where I'd be really starting to think about this a lot more, depending how quick you've scaled, obviously.
On behalf of in company B, or say you do have blocks in company B, at the start, it's usually beneficial to have two, because your main concern is, and what I would say 95% of people watching's concern is VAT, when am I going to hit it? Because company A, you know, if you're looking after it, or let's say company A you're looking after it and company B is just managed, well, company A is going to drag down company B from basically, it's going to just bring it straight up to their taxable supply being more than 90,000. So it's usually then at that point better to separate. But in positions where, let's say you've got your blocks, or say, you know, you're looking after 20 and it's already basically at the threshold. At that point, you're kind of, well, there's no point now in having two. Because they're both paying VAT. So you may as well, or then that's where you go, right, I've got a third company, fourth company, and really need to be careful, because you know, you're getting into, is this anti-avoidance, and that's where you need an accountant to make sure the SIC codes are all correct.
Yeah, because that's what we were saying about, because we had this conversation, didn't we, about SIC codes versus location. Basically, I've been like, okay, well, you've got some in Leeds, you've got some in Manchester, you've got some in Liverpool. Like, we've been like, I guess it's like a branch approach. Maybe,
well, that's the best way of looking at it, is like a branch approach. And HMRC is a lot more comfortable with these structures now because of the way associated companies work from a corporation tax perspective, in that it all kind of affects what your margin relief is. So they know they're not necessarily losing out too much on CT now. But like, you still have to be able to demonstrate, like, you know, if it's in Leeds, it's managed this way by this person. If it's in Liverpool, it's managed this way by this person. And here's the property addresses. You still have to build your narrative to show that you've not just gone, this one's in Leeds, this one's in Liverpool, and in the Leeds one you've got a bloody property in Manchester. Because that will blow the whole thing out, and you'll lose it. You will lose your case. So building the right narrative, but then also having the right kind of structure there to support your narrative is what you need.
So for this area of things, this is really kind of key to see. So I think what MJ said there is kind of something that people really need to listen to in terms of the building of the narrative and telling the story of, like, having different branches and having different people manage different properties from different areas is really key there as well. So if you're a solo person and you're a management company and you're managing things nationwide, if you don't have someone like in my company structure, say that there's Dan, my business partner, who will be spending a lot more time in like Manchester and Liverpool and sorting them properties out, and then whether I'm around Yorkshire and Leeds and that kind of stuff, I will be spending more time doing that, so we can create the narrative of splitting these companies up, of maybe like Yorkshire based company and Northwestern based company. So it's understanding how that narrative works and understanding how you're going to build that into your tax return and stuff at the end of the year as well. And I think it is very key as well. Obviously, if you are scaling up and you are taking on more and more properties, it's like, is this really going to be worth it? Like, you will hit the VAT threshold at some point. And obviously that's changing your business model completely. And it's like, how do we look at that being a longer term solution? And I don't have the answer to that. That is something that is going to be very individualized to your business, and it's going to be very individualized to your accounts. So that's why it's so important to actually get someone who knows about this stuff, can speak to you about it in more detail, and can really understand and put you on a longer term progression and future proof your business if you are getting to that point of where you are really thinking about, I need to split things up, or I need to do this and that, and I need to change the structures around. Because at the end of the day, it's what are your longer term goals? If your longer term goals are to move away from rent to rent and move into another strategy, then it might be something that you just want to kind of not really bother too much on doing now. If it's something where you want to buy properties, develop blocks of apartments and use all of them as serviced accommodation and things like that, then you might be something you even need to dive into in a little bit more detail as well. So it's a minefield. I asked the people in the Past the Booking community, links in the description if you want to join. So it'd be good to hear their thoughts on the Saunders Europe case with HMRC and what impact that will have on the sector going forward.
I think that the best way to look at that is, what should Saunders have done to win this case, is probably the nicest way to wrap it up, which is that from the outset, the properties that they took on should have already been short-term leases, and then that way there was never going to be an issue around material changes. Is there still a direct benefit? Is it in the travel sector? It would have been so clear cut of yes, yes, yes. So I think if they had done it that way, then we wouldn't even be talking about it. So I think rule of thumb should be, what will happen now is there will be a change in legislation. It will move to a system that follows that path of just, was it always short term or was it not?
Yeah.
And that's what it's going to be. So I think going forward, what you should do if you are looking at the TOMS scheme is it a short term lease in existence or not?
Which kind of perfectly falls into the next question, how to best utilise, if it is still possible, the TOMS scheme. From my take on it is that the TOMS scheme isn't something that you sign up to or you utilise, you fall into that category, isn't it?
Exactly. You'd automatically qualify, and if you automatically qualify for it, you have to use it.
Yeah.
So although they're saying,
best way to
utilise it, there's no best way to utilise it. You either have to, or you don't.
Yeah.
And what they're maybe hinting at is there a way to utilise it in a hybrid approach, which there is. You can run properties along in the one company that use the TOMS scheme because they have to, and some that are just standard for managing agent. And I think that's the best way to utilise it, is just as and when it comes up and it's needed.
You're absolutely nailing this continuity, by the way, because the next question is alternative to TOMS, if any. So answering the next question before it comes up.
Alternatives. If you want to look at what is the best alternative, it's being a managing agent. So you're fully disclosed. You make it very clear to the market that you are your own agent acting on behalf of landlord A or landlord B, and then you're only having to worry about the VAT on your commission. Yeah, and you've still got your input VAT on all your expenses that you can offset against that output. So in theory, that is the lowest VAT treatment that you'll get, and by default the lowest CT, but your CT would technically still be the same anyway. So I would say that is the best alternative, and then your other alternative is just that you declare everything as top line if you want to stay undisclosed. Yeah.
So if you have it as a management agreement, so when you're taking on a property and you have it as a managed agreement, but there is a rent / a commission to pay to the landlord, which is fixed each month.
Yeah.
That'd work out the fine, rather than it being, like, say, a fixed percentage. It's a fixed amount.
Yeah, you can have fixed amount, fixed percentage. It doesn't matter as long as there's something contractual and you can demonstrate that it's commercial.
Yeah.
Then it's acceptable.
Yeah, I think that is kind of a key thing, because a lot of people potentially have, like, corporate leases or company lease agreements with
fixed rate.
Obviously we're paying £1,200 a month in rent.
Yeah.
But I think that the idea there of it being, rather than it being a commercial lease, do it as a management agreement. Yeah. Then it's a paperwork exercise.
Yeah. And that's it. You just have your contract with the landlord that shows that it's a management agreement, and you're actively in the market as an agent trying to secure users for your landlord who's your client in their property.
Yeah. How is best to structure your revenue from an SA where your property is in your personal name, incorrectly advised from the start, in brackets?
Yeah, I don't have good news. It's just, it kind of is what it is now. If you've bought your own property and you're using it as a service accommodation, using it on short-term rentals, it's kind of stuck in your personal name unless you're willing to take a hit on stamp duty. Yeah.
Do it before April.
But yeah, that's a tough one. Unlucky, I suppose, that you were incorrectly advised. I'd maybe look at, is there an angle to go back to the person that gave you the advice, and take a split on the costs. Yeah, but, that's a tough one to go down.
I think.
I don't really think there's much options other than just try and minimise or maximise the expenses that are going through to keep as little tax. And what I would imagine is why you've brought this up is probably because you're probably a higher taxpayer. So you're paying 40%.
Yeah, well, let's kind of look at that, maybe flip that in terms of what would be the correct advice at the time.
It all comes down to how. So if you're retired and you're only going to have one serviced accommodation property, then just do it in your personal name. 100%. If it's you and I, and we've got multiple business interests, or if you're someone who has a full-time job and you're just starting out with something like this, the odds are you're already paying 40% tax, or you're close to paying it. And in that case, so that would be obviously like your 90%.
Yeah.
You need to set up your own company, it's called an SPV, special purpose vehicle. So you need to set up your own SPV, have the property through there, have all the agreements through there, collect the money through there, and show that is its own commercial entity. And that applies to then whether you're doing as a management agent or as yourself. And in this case, obviously, it's as themselves.
Yeah. And I mean, obviously, if you were looking, you can't do rent to rent through a personal name because it's subletting, it's illegal. So you need to do it through
your company.
You need to do it through a company anyway. But obviously, if you're buying the property and then doing it like that, then I mean, obviously, people will find out maybe more about this, but when they go into property education or when they're advised correctly, but certain people do just buy a second home in their personal name
and don't think about it.
So it's a difficult one. It's hard to say, and even moving it, I would say, obviously the stamp duty and everything is going to be
stamp duty, capital gains.
Yeah. It's like whether it's going to be worthwhile or not is
if you do it quick enough, the tax hit's not too bad.
Yeah. Is there a way to declare income in actual terms? This is probably not possible, but it would be a game changer if there was a way to do it. For example, 10-day booking at £100 a night equaling £1,000. Then minus the OTA fees, so the online travel agency fees of 18%. Is there a way to declare the 820 as income instead of the 1,000?
No. I suppose no. It would be game changing, and it could be something that comes out in the future. But definitely in this industry and in every industry that I really know of and operate in, the answer is no. The closest thing is from a TOMS perspective, we're working out the VAT.
Yeah.
You only have to pay VAT on the margin, which would have that taken out. But other than that, no, your top line has to be what you charged out. That's your top line. That's it off. This is very similar in the spaces with the likes of Etsy and eBay as well, where people think that you can deduct their fees for advertising on their site, and when you can't. What your turnover is, and what you need to declare as your turnover is what you charge out, and in this case it would be the 1,000 figure. Yeah.
Or you do the online service accommodation marketing masterclass, learn more about getting direct bookings and building up your bookings that way, and then you don't have to pay OTA fees as much. Just saying, there'll be a link in the description if you want to look at that as well. Hi Adam, could you please ask your accountant on legal schemes to help reduce tax? We all like to know about that. Things like charitable giving and any other things that we may not be aware of.
Oh, okay. Yeah, look, that's not even necessarily property related.
That's
like general tax planning. But you're right. So if by SIT you're talking about private pensions, whatever you contribute in, the company gets the tax relief.
Yeah.
And same with charitable donations, your company will get the tax relief. But for a charitable donation, your company does have to have a tax bill first.
Yeah.
So you've got taxable expenses and then taxable relief. Which are two different things. So a SIP would fall under taxable expense in that it reduces your profit and therefore reduces your tax. Whereas a charitable donation is you've established what your tax bill is, and then there's a charitable donation that reduces that further.
Right.
So if you're already loss making and you've made a charitable donation with the purpose of trying to get tax relief, you've lost that.
Yeah. Well, I guess in that case there, in general, like both of them things, if you have the right accountant or the right person to speak to, advise on that.
Every quarter when we check in, we're asking the question, do you want to top up your pension at this point? Because you've got to top up your pension in the year of whatever your financial year is. So if you make 50,000 in that year and you don't want to pay tax on 50,000, but we're a day over the year end, when you then make the pension contribution, you don't get the tax relief. You can't backdate when you want it to happen. It has to happen
at that point.
So,
hi Adam, please can you ask your accountant on an ideal company structure for those that have units which they manage on behalf of investors, units they manage as a part of a JV, and ones that they manage on behalf of themselves, and how to structure this for a tax perspective, like having all of them in one company or split across separate.
It's going to come down to what is the overall turnover for each, let's call it a segment So for each individual aspect that has its own differentiation, because if they're all turning over, or let's call it profit, like say they're all turning over 100,000, that's yours, right?
Yeah.
There's a VAT hit. You may as well just put it into one company at that point, because there's no point having the costs of compliance and accountancy fees for 4, 5, 6 different companies when they're all paying VAT anyway.
Yeah.
And especially now with the way CT works, in that HMRC makes us look at all the companies that are under your banner as an individual and combine them, and then so all this margin relief that people are getting it would get wiped out. So for the savings that you're going to get, it's not massive. I suppose it's one of those things again.
Depends on them. I think it purely does depend on numbers, because again, we have a similar structure now as well. We don't necessarily have the JV ones, but we do have ones that are on behalf of our own that we manage, and then we have the ones that are on behalf of managing for other people. When you bring the JV into there as well, I would imagine that the property held in the JV would be an SPV anyway.
Yeah, and then it's
then it maybe just link the SPVs and managed by the management.
I think that when there's a JV involved where the property is going to be owned at the very end, I would always separate it.
Yeah.
Because the last thing you want is one of your trading companies to have something go wrong or go insolvent, and the assets up for grabs.
Yeah.
So I think from everything that they're saying, the joint venture, if the ultimate goal is to own the property at the end, that should be set to the side. Some company. Everything else will then the numbers depend on whether they get separated out or combined.
What if it's a JV on like a rent to rent? So say me and you decided that you were going to give me 20 grand and I was going to go set up a couple of rent to rent style properties, and then we were going to split the profits.
Then it's just numbers. You could put that all through the one.
You could put all that through the one,
The company, as long as it's an individual loaning in, then the company can do whatever it wants with the money, depending on the loan agreement.
So again, thinking about how many times you're looking at JV, or how many different partners you're going to have with JV, and if you're going to have multiple different JVs, you might want to look at it being more of a loan agreement and a structured agreement for that particular property going into one company to help accountancy fees and stuff, rather than maybe looking at having a separate one for each.
Yeah, sure.
Hi Adam, is your company registered in Ireland?
No. We're not. It's not. No, it's not. That wouldn't work.
Yeah.
Just before you ask.
Yeah. No. I mean, I am.
Otherwise, it would be in, Cyprus or Dubai or.
Bahrain. Offshore accounting is not quite at this phase.
With you about this topic, we actually do specialise in international structuring in here. So if you were eligible, I could set it up. So if you are eligible, reach out and I will set it up. So we're licensed with, we have a partner where we can set up companies anywhere in the world. We've done it that many times. You probably find that you think you're eligible, but you're not. 95% of people, it's a waste of time. But for the ones who are, it's obviously a brilliant thing to do, and I would always recommend it.
And that's all we've got for the minute. Is there any other kind of key points that you think from them questions that you'd?
No, I think one thing that's definitely highlighted is everyone's worrying. When in reality, it's never as bad as you think. Look, there's 2 questions in there definitely are interesting. It's like, could you benefit from having a multiple company structure?
Yeah.
Probably.
Yeah.
Reach out and we can talk about it. But 95% of people just don't need it. So there's always this worry of, I'm not doing something right, or I'm paying too much tax, when in actual fact, naturally you're probably paying the right amount of tax and it's already at its lowest. So we always try to encourage people not to panic. Especially when things like this happen with the likes of Saunders in Europe, and there's now this fear of, I'm going to get caught out or something's going to go wrong. When in actual fact, with the very nature of how TOMS work, you actually have a year and 3 months to fix it already anyway. So it's never as bad as what people think. I think if people are panicking or worried, they should just pick up the phone and ask the question. And often we're on call with people for maybe 10 minutes max, and they've got all the answers that they want, and it's peace of mind. So.
Well, there you go, guys. And again, I'll just reiterate the fact that I'll put a link to speak to Michael or his team in the link below. So either if you send an inquiry or booking a call, then the guys will be able to help you out and see if they can set you guys up. But I can't recommend them enough. I'm being completely honest. If you are interested in onboarding an accountant or onboarding a new accountant, then definitely hit the link below and give Michael and MJK a shout.
Yeah, definitely. Yep.
Obviously, they've looked after me great over the last 3 years or so we've been doing this business, and as you can see, there's a lot of potholes and like different things that you can end up falling into if you don't get it done right and done correctly. And if you do want us to have another chat in the future, we can do a potential part 2 talking about kind of company structure when it comes to buying assets and the difference between like holding the assets and the trading of the assets and stuff as well. Hopefully you've enjoyed. If you've got any other questions for me or Michael, I'll make sure that you can check the link out underneath the video. And if you haven't joined the Pass the Booking community yet, there'll be a link to that in the description below. You'll be able to kind of speak to other Airbnb hosts, other short-term rental operators on a day-to-day basis and get any queries or any questions that you've got out of there as well. It's completely free to join. And yeah, I'll see you guys in the next one.